I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Bob Hoye. He's the Chief Investment Strategist for InstitutionalAdvisors.com. He's also a market historian. Bob, welcome to the show.
Yeah, well, good morning, Jim. Good to be with you. It's that time of the week, isn't it?
The U.S. stock index falling, ending what you called the phony uptick.
Yeah, well, we're watching for quite some time that if it was sort of a weak or indifferent day in the markets, there would be a strong close. And then somebody actually did a study on it and showed that if you just, the returns you'd get for buying and owning stocks for 20 minutes at the right time of day, you would get a terrific return out of it. Sort of like when they show the return for the full year in a stock market over a long decade, and you buy and hold, and then the returns you get if you buy in October and sell in May, and then you're talking real money. So anyways, we're watching this, and this is an old trick from years ago in the Vancouver Stock Exchange to make the stock that you're promoting look good. Just give it a phony uptick at the close. And whoever was doing it, who knows what they were, but they were doing it with the New York Stock Exchange, and it was just, well, it smelled. It was so naive. So, but it also, you had people, because that return was becoming obvious, you'd have a lot of traders trading with it. And then if the market got heavy enough, it would go away, and it seems to have gone away. And then the other one from a few weeks ago was that you'd want to see a senior index like the S&P or the Dow have a lower low than the week before. Well, 2 weeks ago, the NASDAQ did it when a couple of big high-tech stocks got in trouble. And then a week ago, in the last week, the S&P and the Dow and did it. So, and then even the whole New York Stock Exchange composite. So we got two things that we thought would indicate a change in the marketplace. That was the phony upticks and then having a lower low than the week before, and that's what we got. And the markets have been heavy in here, but not supremely heavy. It's just kind of the start of a rollover. But let's look at what happened here. You had a very oversold general stock market down into December, January. Within this specifically, you had a disaster going on in the crude oil price and in the oil patch stocks, and then that then fed into junk bonds, because I think back at the top of the boom, about 18% of junk bonds were oil patch related, so you can see where there were problems there. But it also, we were working on that there around January could be a seasonal low for crude oil, and so it all came in and exhausted itself out with all kinds of readings, and then you had a really good rally. Our target for the rebound was around March or April, and it extended a bit beyond that. But hey, it's tough to get any more close on that than that. And then we were starting to see a very positive technical numbers. You had a huge swing from very oversold to overbought on a number of senior indexes, and also on base metal indexes and crude oil, that sort of thing. And then we got up to, we had our inverse springboard, which is related to momentum and time and says that things are getting overdone. And then you had the it just sort of got quiet, and then, as I said, it rolled over. So what we're looking at now is just how far this may go. It's obviously tied to crude. You have a good day for crude, and it holds the markets, and then you have a bad day for crude. And this is actually a seasonal high potential for crude around May. And we've got good readings on that. Technically, it's really overdone. And then you had the news in the last week about the fires in Alberta threatening oil production from the sands. And so there has been some decrease in production there, but that just added a timely news event to a time when you would be looking for an important high for crude oil anyway. So it'll probably roll over in a few weeks' time, but in the meantime, the bulls will play the Alberta story as best they can. And this, and when I said the other one we get in here is with the improvement in industrial commodity prices, the credit spreads narrowed with the difference between, say, junk bonds and long-dated treasuries narrowed terrifically. It's really been outstanding. And now we've had about 3 days where the ETFs on credit spreads have, let's put it this way, stopped narrowing. So, but this is also a seasonal one here. You can sort of see, Jim, as it's all coming together. You've had the strength in industrial commodities. You've had the strength in junk bonds, and you all in the seasonal thing. And the seasonal on credit spreads narrowing into around May, June, and then turning to widening. Gosh, that's been on as long as I can remember. It goes way back. And then more recently, you were able to tie it to energy prices and commodities, things like that. So it's a kind of a built into the market sort of thing here. And you'll recall in 2015 we were looking for the credit spreads to reverse to widening. We're probably talking about in late May. And then they started to widen. And then we had the first breakout on the trend change. And then we needed to have the second breakout by late July to really push off a liquidity price problem, and that didn't come in until the first week in August, but that was close enough because that then pushed off the Shanghai problem in their stock exchange. And of course everything came down, and that kept getting worse right into January. So that we've done the full circuit on the year here now, and we'll look for the same pattern. First of all, the turn to widening, which may be happening now, but hey, there's not enough change yet to conclude. And then we'll watch for the breakout in the trend once the trend is turned, and then that'll be tied to the discovery of the next liquidity problem.
Bob, do you think some people are starting right now? Royal Bank of Canada says it is complying with a request from the Canadian Revenue Agency to supply information about people who did business with that Panama law firm where they had the leak, the Panama Papers. They requested 40 years worth of records.
Oh, that's bureaucrats right out of control. I believe that was tax avoidance rather than really a serious criminal crime, although some people may have been. But what it brought forward is a number of governments realized, oh, gosh, these people have money and they're not supposed to have money. So as you know, the thesis has been for a long time that all the money in the country belongs to the government, and what they allow you to have through various tax breaks is their own munificence. So, I look at this slightly askance, and bureaucrats demanding 40 years of records. I mean, this is just a horror show. You try and get 40 years of records out of the government would also be a horror show. No, thank goodness I'm not involved in that one.
Try finding an email from Christy Clark. There's not even a record of her speech about the bridge they plan to use to replace the Massey Tunnel going between Vancouver and Delta. We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Bob Hoye. Bob, gold, silver, copper were all up today. Is this a reaction to lower stock markets in the U.S.?
Oh, somewhat there, no, but mainly crude oil's had an extra leg up, so it's simply also the dollar index is slightly down, whereas it was quite firm yesterday. This is the other one that's changing. Oh, for the last month we've been watching the dollar index, and each time it would sell off the momentum thing, the RSI daily would come down to 30, so earlier in the week it was down to there for the fourth time. And yesterday's jump up was pretty good. So it looks like the dollar is trying to turn up. Now, at the same time, as we discussed earlier in the show, industrial commodities have made fabulous rallies and technically are overbought and are poised. So somewhere in here, it's close to rolling over. Now, the other thing was that the gold and silver had a terrific rally, and as you know, we always like to talk about the silver-gold ratio because in any rally for the precious metals, silver will outperform gold. So we watched the momentum on that one, and the daily RSI, a couple of weeks ago, got up to 84, and that shows a lot of excitement in the gold market. So that then is a warning that the best is in for a while, and we for a correction in the precious metal stocks and in precious metals themselves. The stock side was just fabulous. You know, the big Hoye index from 99 to I think the high was around 210. Terrific rally. So we're looking for a correction there because I think it's early days in a cyclical bull market for the precious metals. Now, on industrial commodities such as crude oil and the base metals, we think that it's due a correction, and when it comes in, this could go back to test the lows of last January. So we're not looking for a cyclical bull market in industrial commodities, but we think that a cyclical bull market for the precious metal sector has started, and the previous bear market had ended in that November-December bottoming process. So I like that idea. I think it'll work out.
I was wondering, what will lumber stocks do with the rebuild they'll have to do in Fort McMurray?
I think the North American lumber market is a lot bigger than having to rebuild houses in Fort McMurray. That's sure it's very topical now, but the lumber price spiked up to, what was it, 319 earlier in the year, again with good momentum, and it has broken down, getting a rally. There'll be some rallies, but I don't think that that's going to be a huge effect. Actually, it's more than a North American lumber market because there's a lot of export of lumber as well. So, good question, but I don't think it's going to be a big item.
Yeah, it depends how many homes they decide to build in China, doesn't it?
Yeah.
Some of our analysts have said the U.S. is either near recession or in a recession, and you said there's a very interesting thing you can look at that might indicate whether that's true or not.
Yeah, I was just made a note here from Transport Topics, and the big Class 8 truck orders, they report that they tumbled 34% on a year-over-year report, and that this is a 7-year low. So it's got a weak freight environment and slumping used truck prices and overstocked dealer lots. Now, that doesn't sound like happy times to me. And then also I saw one the other day about railroad locomotives in Arizona. The ones not being used, they just park on immense sidings. And there were, dozens and dozens and dozens of used of locomotives not being used, just parked there. So the transportation side is slowing down, which is not a boom. And then you've had the weakness in freight and the Baltic Freight Index for a long time now, so that's not showing a boom. So it's all up to the NBR, the National Bureau of Economic Research, and that's a loose organization of economists that determine the comings and goings of the business cycle. And typically, for the last, 40 years, their announcement of when the recession started is usually a year after it started. So I think in looking at some of these weak number series, that probably the recession has already started, and you're just waiting for the NBER to come up and say, oh, it started in October or, whenever. And then once it becomes official, then it's in the books. So, and you're even seeing, the people guessing about Fed interest rate policy, and with softer numbers coming in, they think that then the Fed won't do the interest hikes that they were talking about. And of course that makes the stock market better, except that ain't happening today. So, the policy-making world of central banking and economists, and, it is just so Middle Ages. It's just mumbo-jumbo, a lot of intuition. They may think that they're managing the economy, but that's just a thought. They really aren't. It's the public determines what's happening, and when the public gets busy, you have a business expansion, and when the public is overextended on houses or cars or Class 8 trucks, then they stop buying. And it's just, the researchers have traced the 3 to 4 year business cycle right back into the 1500s, and it's there, and it's human nature, and there's nothing that these academic fools can do anything about, except they're just rent seekers getting a job working at the central bank. So, but that's we're now rambling. Let's close it up for the weekend.
Well, one thing too, the business, the Conference Board of Canada says business confidence is at its lowest level since 2008. And I think it was also you who pointed out, transportation stocks usually lead the way if it goes down.
Oh yeah, that's the old Dow theory, and that worked for us last year when in May the transports did not confirm the high in the Dow, and that's when we used to say that that bull market was over. And then further, when the credit spread started to widen, and we had the widows and orphans sell on bank stocks in July, that's when we said the bear market had likely started. So here, and again, I've been watching the transport index since the first of the year. Yeah, it's gone up, but it hasn't. It's not changing the relationship with the Dow Industrials and the transports, so it's still giving a negative signal on the stock market. So thanks for bringing that one up.
Will sell in May, go away work?
I think so again this year. It's amazing how that's, and I think, as I said, due to the credit spreads narrowing and then turning to widening, and also the seasonality for rallies in base metals and in crude oil. So I think the best is in for those things.
A lot of people are shocked, even though they have negative interest rates. People have been buying Japanese government bonds.
Oh, yeah, negative interest rates. That's bizarre. Again, it shows that their theories are not working. Central bankers have eased tremendously because they think that easing credit prompts business activity, but that's not the case. What it is credit expansion and a business expansion go hand in hand together. One doesn't cause the other. So anyways, they keep pushing on a string, and so all the excess credit that's not being used in legitimate business goes into speculation in whatever the public decides. It generally has been stocks and junk bonds until, let's say, this time last year. And then it was in real estate, high-end real estate in major financial capitals. And if you look at comments coming about New York City, that's topped and going sideways. So all of the big speculative urges have been expressed. But just to get back to your negative interest rates, the intensity to keep pushing this old story, and they still believe that somewhere, if they push credit, they're going to get business expansion. It's not happening. So this is where a lot of careful people who can't go out and speculate in houses or in junk bonds are buying high-grade stuff, and then that eventually, on the nearer terms, drives it to negative interest rates. It's never happened before, and it's absolutely bizarre, and it is due directly to central bankers with carelessly fabricated theories. This is really exciting, Jim, because these guys themselves are proving that theories dearly held for the last 100 years have been bogus, just not working, and it wasn't proper research at the top because the Fed was pushed and formed in 1913, and the idea then was that anybody with any experience knew that if you had a serious hit in the financial markets, it would be followed by a recession. So the idea behind the Fed was, we can prevent the serious financial hits, therefore we won't have recession. There's been 19 recessions since. So the theory's not working. Veterans in the financial markets have known for generations that the theories are not working, but you have to have it concluded by the general public that they're not working before you can constrain the gambling that's going on at central banks. This is exciting times to be. I'm going to love it. It'll be fun to watch on the next contraction if the public turns its common sense on and looks at that and says, hey, you central bankers, you've been essentially gambling with our taxpayers' money. And it's very exciting times to be around.
Well, you'll know it's very exciting when you see stocks go up for pitchforks and torches.
Yeah, tar and feather them.
My guest has been market historian Bob Hoye. Thanks for being with us, Bob.
Very good, Tim. We'll talk to you next week.
Bob is the Chief Investment Strategist for InstitutionalAdvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. You can forward questions or comments for Bob to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.